Good evening. This is Ken at Tortoise Capital with a review of the weekend trading reports for February 9th, 2019. Markets in sideways normal. We're in neutral on both an annual and a 10-day look-back period. Looking at the market mosaic, yellow sideways. We're still close to that 200-day moving average. Danger and opportunity. The intermediate strength of the trend and the 5-day slope of the 50 are both green bullish and green neutral. The risk index is the 30-period moving average of the VIX divided by the 10. Current readings at 1.17, so we're at risk on conditions. We take that score, look back 5,000 trading days, compute the Z-score. So the risk Z is at 1.78. You can see a 90-day histogram here. As long as we're above the zero line, it's favorable for swing trades, but with that decaying risk Z after a 2 sigma excursion, it also suggests that run could be done. So while I do have a long side bias, I'm very mindful of the short-term changing nature of the market. So I'm ready to take profit sooner rather than later, and I'm emphasizing more of the turbo plays and restricting my targets to just the strongest sectors. Blended month rebalancing. You see the holdings here that should read for February. Next reevaluation is done in March. These are the current winners based on Friday's closing prices. Latin America remains strong, as does Brazil. Theoretical exposure in ETF2 is at 90%. ETF 13 portfolio for blended monthlies. We're mostly back on buys now, except for Japan. Saw strength this week in some defensive plays here in treasuries. The 32 ETF portfolio, Latin America and Brazil both gave back some of their gains. Strength in the bonds and utilities and some of the defensive plays. And again, this is starting to undercut some of that strength of move that we saw before. So that's why I'm a little more concerned about the swings right now. The diamonds at minus 0.4 were a little better than the spiders at minus 0.55. Dow 30 strength, Boeing, Merck, American Express, Walmart, United Tech. Sector spiders. 3/4 are on buy signals. There was strength in software and treasuries and utilities. Again, the defensive plays. Energy got smacked hard. So I'll be looking at that as an extreme move. Looking at USO for oil and Devon Energy along with the XLE sector spider. ETF Max. Some strength in here. Again, treasuries, technology and software. 9 out of the 10 ETF2 regions are on buy signals. So we're at 90 and 10, up from 40 and 60. The S&P at 43 is better than the EFA at 42, so it's leaning back towards the U.S. right now. And inside the U.S., it's the S&P, then mids, then tech, then small caps. Strength in the U.S. Industrials and utilities. Energy really lagging. U.S. basically below average. Some selected strength in the alternate asset classes and in Hong Kong, Philippines, Brazil, Mexico, Latin America. Despite their weakness this week, still leading the way. You see that reflected in the ETF2 database here. White and green in these bond funds, though, suggests, again, preserving profits, watching for resumption. And these greens, again, we're just winners continue to win. We'd be looking for opportunities to reinforce that strong trend. Haven't seen these for a while. So white and yellow in the semis and in the home builders. So white and yellow, that means it was weak, but now it's good, and so we may be looking for opportunities to exploit some new strength. And it's a reflection of new momentum interest. Was below average, now just creeping into above average. The opposite would be this white and green, which is was great, now just good, so it's starting to cool off. Shifting to the daily. Again, that's that nice 30-day run has been extraordinary. Hitting the 200-day moving average, starting to stall, a 3-day stall, but Friday had a strong finish. So here's the yellow zone for Friday. Here's the yellow zone for the 10-day period. And here's the yellow zone for the 30-day period. Again, you can see we're overbought on all of those measures except for the daily. These are the signals that if we get a second day of momentum, the universal entry gets us tripped in. If we get through the 200, that's where I really expect it to take off, and then those would hit. So these are my key indicators that go back to daily, weekly, and monthly time frames for reinforcement. You can see the price ladder on the way down, looking at things like daily low, PSAR low, the breakout from the dragon, swing low here below this support level, this, and so on all the way down the stack. Here's that the belly of the dragon, and then the belly of the RL10. Oops. We are in, we've come through spring and summer. It corresponds with this move. And now we're tipping into fall. And after the fall, after the winter, you know, my concern would be this kind of a move, which we saw here. DuPont, very good quiz from this weekend. That was a great quiz Thursday. I hope you took advantage of it on Friday. Some amazing intraday moves there. McDonald's is of interest, 10 to 1. And a doji and a channeling. Well, that's one I'll be looking at hard for tomorrow. In the ETFs, there's a 3.8 in Japan. Energy, which got smacked hard this last week, has moved into position. Real estate, Boeing, United Tech, these are all the most positive Z stretches. The negative Z stretches, Verizon, Dow, DuPont, and now McDonald's. Extraordinary stretch below. Interesting. Disney is getting close to coming into super pinch territory with a very compressed pinch box in DIS. Plenty to choose from on the auto framer, and on the fractal framework, it's really the preserving on against these outsized moves to the upside. That's how far ahead Boeing, IBM, Procter, and GE have been above their fair value. Deep discount plays still available here: Microsoft, Pfizer, Dow, DuPont. And then the daily squeezes. These are the ones that had relatively small ranges on Friday, and yet their range stats are large. So if you get a breakout above the Friday high, then these become interesting. And so when I see Win and Caterpillar and Apple, all of which are frog champions, that suggests we're in line for some very nice intraday trading among those. McDonald's, once again, that's definitely one I got to frame. 4 seasons of MACD. Has McDonald's in the winter, along with Cat and DuPont and Verizon. Not a surprise. I would be looking for these ones that have been exceptional, like Boeing, Coke, Apple, Procter, Merck, high in the summer and well above 1.0 on them on their Z scores. That means they're well above their Red River. Those are the ones that if you've got long positions and you definitely want to preserve before you start getting that fall decay. New explanation for the ADX stat, how I'm starting to think about it now. Give you some insights into this emerging chart. Still a work in progress. Not much volatility here in this recovery that we've had, which is why the sideways normal and the risk index are so low. But we've had that nice move, and now it's rolled over and crossed its 10-period moving average, that slope stat. 2 standard deviations above the long-term average. You can see that nice move that we've had kind of sealed off here with this P1, if you will. And that's been the nice move back to the 200. So the last 3 times it was there, it fell. I'm not saying it will, but be prepared. All the volatility's drained out. 30s rolled over, the 10s rolled over, both are coming back towards the river. The 90, the longer term trend has improved, although it's still 2 sigma below the long-term average. So this is a market that's had a tactical, very nice run that's cooled off and now pausing to reflect. Is this this support level, is that going to be more important or stronger than this resistance level? If this support is strong and that resistance weak, then off it goes and back to test 295. Otherwise, it's that price stack all the way down. And that's everything I want to cover. For the guys in the chat room and subscribers, I'll be posting a trade frame on McDonald's. That one looked to be the most interesting of all the ones we saw tonight. So this is Ken at Tortoise Capital. Keep your risk measured and your powder dry.